Good morning, everyone. Happy Thursday. Happy St. Patrick's Day. I am Ernesto Burden, the publisher of New Hampshire Business Review, and I am delighted to welcome you to today's webinar, sponsored by Service Credit Union, Key Trends to Watch in Commercial Real Estate for 2022. Exciting things happening across the real estate spectrum, and we have some terrific experts today to talk about some of their observations on some of these trends and what's happening specifically in commercial real estate. Let's introduce them now. We have David Weed, the Assistant Vice President of Business Services at Service Credit Union, Daniel Scanlon, Senior Associate at Colliers, and Earle F. Rosse, Senior Manager of Commercial Lending at Service Credit Union. Welcome, guys.
Hey, Ernesto. Thanks for having us.
Thank you for being here, and let's get going as soon as we get Dan on the screen. Perfect. Hey, Dan.
All right. Good morning.
Good morning. And let's everybody just take a minute and you know, I gave a very brief introduction of you, but perhaps you can expand on that introduction and give us your very high level thought on the industry today, and then we'll move straight on into questions. And speaking of questions, for everybody out there listening, we do have a question feature in the GoToWebinar control panel. So go ahead and type your questions in, and I will get to as many of them as possible throughout the next 57 minutes. David, why don't we begin with you?
Yeah, you know, it's certainly been a remarkable time. You know, we go back to March of 2020, and you know, we hit a health crisis, a pandemic, and you know, essentially, a lot of dislocation in the real estate market. You know, remote working, retail impacts, but the sort of story that followed what I think was a little bit unexpected. You know, 2 months, 3 months later, people figured out ways to adapt, and the remote working sort of environment became a thing. The economy somewhat smoothed out. Certainly, there's still impacts, and so you know, I think the last couple of years really is a story of resilience. And really some, success stories in different real estate sectors, and as well some emerging trends relative to office space, and as well remote working space, hybrid space. So interesting times.
Yeah, indeed. Thank you, Dan.
Thanks for having me. I got to find the guy who put Daniel on the screen for my name. My mother is the only one who calls me Daniel. But it's great to be here, and I appreciate the invitation to participate in this. I think there are a lot of key trends, and I think they'll all come out as we go through our conversations. I was going to say that supply and demand, I think, is one of the key trends, but even more fundamental than that is that I think that the pandemic really accelerated trends that were already in place pre-pandemic. We had supply-demand issues. We had questions about office space. We had questions about retail. We had questions about the supply chain. And I think we'll be talking about this quite a bit during the course of the program today. How the pandemic really accelerated a lot of that stuff. So I'll leave it at that for now and see where our conversation goes and see what kind of questions we get this morning.
Wonderful, thank you. Earle.
Well, I suppose that the principal thought I have now is having been through several cycles over the last few decades here in South Central New Hampshire and Northern Massachusetts, we've seen many changes in the environment, from different interest rate environments to different economic cycles to, as David mentioned, a pandemic, certainly political upheavals of all types, energy costs problems. And, despite the fact that we all seem to think that today in the last couple of years, and certainly the last year, we've seen dramatic changes. I think there's almost always been changes in this market. And what I'm struck with is that while different opportunities come and go and different types of real estate investment vehicles seem to be the kind of the item du jour, there's always a resiliency in the market, and people and investors always find the current good thing to do. And even in today's unsure environment, we are very busy, and we see lots of things happening. So, you know, change is always difficult to navigate through, but I guess I tend to be an optimist, and I think we always find a way to do it. And I'm sure we're going to find a way to move through whatever changes are in store for us now. So.
Thanks, Earle. Well, you mentioned one thing that I think would be an interesting place to start with, which is, and I actually you all outlined a bunch of topics that we talked about in our prep call, and I think each one of them will be a great one to get to. But what if we started with interest rates? What's happening? What's going to happen? What do you think that should? What do you think that people should do as a result of that? Go ahead.
What's happening? You mean like this morning? Because you know, things are moving quickly, and we saw yesterday midday the Federal Reserve increased their rates, and I was watching the news this morning, and they're already starting to ripple through home mortgage rates and things like that. The prime rate's going to bump now if it hasn't already done so. You know, I think in general, we've seen a period of very low interest rates for a very, very long time. I want to say almost without exception since the end of the Great Recession 10 years ago, 10, 11 years ago. I think that while there is some uncertainty in the world, and certainly things like the situation in Ukraine and all these energy things, there's a lot that can influence things. I think we're going to see a period of rising rates, and I think that's inevitable right now. I'm sure the other gentlemen maybe see the same thing.
Yeah, I think the question at this point in time is not so much how much. I mean, the Fed has sort of choreographed 150 basis point move over the next several meetings. Whether or not they change their velocity, or also whether or not they change the intensity of their sort of you know, interest rate moves. And so I think that's really what the focus is on today. And obviously what that, you know, translates into is higher costs. And you know, again, to an attempt to sort of tampen down this inflationary environment.
Do you, Dan, Dan, what do you think that higher interest rate means for the market?
Well, typically, when interest rates go up, the cost of borrowing goes up, and you can't afford as much property. So that's how we see it filter into our world. It'll be interesting to see what impact it has, because apart from that sort of textbook dynamic, we've got the supply-demand dynamic that I spoke about earlier. And something that Earle and Dave don't like to hear about very much is that there's tons and tons of cash in the market. Over the last couple of years, I've been busy also, and a lot of my deals are cash-only deals. They never get to a financial institution. So if those things continue in play, I think that the conventional impact of increasing interest rates may not be quite as severe.
Does that potentially also, you know, cool off the market a little bit and maybe bring price increases down a bit, you know, which is what it looks like it might do in residential?
Based on where we are in the market today and the demand that we face, I would not expect to see that happen very quickly.
No. Yeah.
If you can't find it, it doesn't matter what it costs.
Yeah, I mean, I think Dan brings up a very salient point, that there are a number of buyers out there that are cash buyers, and I'm not a residential real estate person. I don't know that market very well, other than as a consumer of residential real estate. But, you know, there are a number of people who are doing cash deals or doing 1031 exchanges on properties where they're reinvesting money that they're rolling out of one investment into the other. And I think that, you know, certainly for a segment of the population of investors who rely on debt, it's going to make a difference. You know, things become less affordable. The debt service coverage becomes steeper on a deal. But I think the effect is more psychological than financial. You know, if you're looking at rates that go up in this range, I mean, the average rates for commercial deals are in the high 3s, low 4s, let's say that. And if they go to mid 4s, close to 5, I don't know that really changes the dynamic of a lot of deals. You know, if it works at 4, it probably works at 4.75, 5. But I think when people think, oh my God, rates are going up 1.5%, oh, you know, it sounds like a big impact, but I agree. The actual effect may be more interesting to see than we think.
I'm sorry, Dave, I just want to jump in quick. As with anything, it depends on the asset class within commercial real estate that we're talking about. My sense is that the interest rate increases may have a stronger effect on multifamily than on some other asset classes. Multifamily is investment real estate, and that's when you get into the debt coverage ratios and that sort of stuff, where industrial and office, to the extent that they trade, generally tends to be more users than investors. Sorry to cut you off there, Dave.
Dan, I just wanted to ask a question. I mean, I think you would probably see this a little bit, is with this interest rate move from the Fed, maybe there'll be an adjustment in cap rate expectations, you know, for certain types of properties.
There should be.
Yeah.
So, you know, again, I don't know if the textbook applies anymore. I don't know if it's time to throw out the textbook and that we're in new times and creating some different paradigms.
Yeah, I think your point about, you know, such demand is going to sort of mute that, you know, cap rate move. Again, there's a lot of money in play at this point in time.
Well, David, I think that moves us nicely into a related point, which is the supply and demand point. The demand is outstripping supply, and maybe interest rates continue to be related to this also. Is there an impact on the ability to build with interest rate changes, and then more generally, what's happening with supply? Is, you know,
Sure. We're at historic lows, Ernesto, at this point in time, both on the residential and commercial sides. So obviously, you know, that, you know, creates a very competitive environment. You know, I don't expect that to change anytime soon. I think that the other aspect of what you mentioned, you know, is playing out in the construction market. You know, we're seeing cost escalations, rebudgeting, and, you know, there's been some cases that, you know, we've worked with where budgets have grown 20 and 30%. So that's a real factor, because essentially with that, and if you factor in some things on the operating side, let's say just for example, utility costs, you know, it changes the pro forma model of an investment, right? And certainly that's going to sort of cause people to actually either delay a project or otherwise cancel a project. We've seen both.
Is labor an issue with those projects as well right now? Kind of like it is with everything else everywhere?
It's across the board. And I mean, I've heard instances where, you know, some contractors have had to pay general laborers, you know, $30, $40 an hour. And, you know, that sort of trickles through the whole supply chain.
Mm. We talked when we were planning this call, we talked a little bit about whether or not sort of that inventory shortage was causing people to sort of spread out in other directions, move out of primary markets and into secondary markets in terms of places that they were looking to build. And maybe we can talk a little bit about what you guys are seeing there.
Yeah, we've actually seen, significant projects, north of Concord, by significant, regional companies, and they see the traffic patterns shifting. They look at the data, and again, we've seen that migration accelerate over the last couple of years with the remote work environment. So again, people are looking for quality of life, and in particular, New Hampshire represents that. And to your point, price points in different geographies, northwest of Manchester, north of Concord, et cetera, projects are happening.
I've noticed, as David said, more movement in the more outlying areas, the areas, let's say, north of Concord, the areas along the seacoast that are up in Maine, moving towards Portland and some of those areas, where there's been a big influx of people who, because of remote working, now can kind of be anywhere. And it's happening in other parts of the country too. Florida, it's a lot of people who have relocated to sunnier climates because they can still work for the company that they were working for. And I think what's happened is, as that has happened, other developments have followed along. So, if towns like Plymouth and Franklin and Laconia are getting kind of a rebirth, then that lends opportunities not only for the residential markets in those places and the apartment type developments, but also for the other services that go along with it. We're seeing development of more smaller shopping plazas and grocery store plazas and small office buildings for service companies that go around there. And so I think the development opportunities have been kind of following the migration of the population, and a bit they go where the costs are less. But the conventional wisdom said, if you couldn't afford to do something in the 495 or 128 belt in Massachusetts, you would move north to New Hampshire, southern New Hampshire, and then keep migrating out to less and less expensive properties. I think there's a little of that going, but I think most of the movement is caused by demographic shifts, and certainly in the multifamily residential. I mean, major apartment complexes are probably one of the biggest thing that we see people investing in, and those are going where the people are going now. Those are starting to go where the people go. So, as Dan said, I think there were some of these shifts starting pre-pandemic. I think that the pandemic and resulting work style changes have really accelerated a lot of those changes.
Once again, I think it depends on the kind of commercial property we're talking about. With industrial, and I spent a lot of my time with that in the southern tier. You can't work from home. You got to go to the plant. And so we're getting back into the labor issue with that. Where is the talent pool, and how far north can companies in Massachusetts go and still be able to pull from the talent pool that they need? I know that people have commuted in the past from Plymouth down to Boston. There are buses that take people down. Some people want trains to take people back and forth. But you still need a basic labor pool that you can rely on every day. One of my colleagues has a listing in Warner, and he is in the process of selling it to a Manchester area business that was hoping to stay in the Manchester area. I actually showed them a building that ultimately was not available, but they need roughly 50,000 square feet. Impossible to find in Manchester or Hudson or Nashua, at least impossible in terms of what their needs are. So they're going to Warner. I never would have expected something like this. Mm-hmm. I guess they feel confident that their labor pool will move that far with them. So I haven't seen it to the extent that Earle or Dave are talking about, at least not on the industrial. Office is a whole different issue. I'm sure we'll get into that during our discussion today. But yeah, there have been some population growth, some demographic changes, and those will always dictate retail. You know, we've talked earlier this week about the market baskets of the world who go where the people are. And to some extent, that is happening more further away from the central population areas.
Now, speaking of retail, you know, there's a lot of, I think, doom and gloom kind of reporting for bricks and mortar retail because of e-commerce trends over the pandemic. But I got the sense from talking to you guys that that's not the whole story, that there are retail things still happening. And maybe you could dive into that a little bit.
Well, from my perspective, retail has changed. The look of retail centers has really changed. The look of the large shopping malls and all of that started pre-pandemic. Think about the Mall of New Hampshire and Sears going out of business, and you've got a Dave and Buster's, and I forget the other large box that's there. But I kind of look at the small strip centers and see what's happening. And the formula has become really simple. If a business sells a service or a product that you can buy on the internet, you will not generally find them in a strip center. But that opens up opportunity for all kinds of businesses that people have to go to, whether it's medical, food, fitness. Those are the kinds of businesses that have really taken over with the strip centers. And I tend to see a really, really bright future for those. As far as the shopping centers, I see opportunities there. I view them as big boxes, and that somebody will be able to take those and redevelop them. We already saw it happen to some extent with the Lowe's on Hughes Road in Manchester. They took this big box and they've put 4 or 5 different things in there. There was a movie theater, there was a trampoline place. We've seen a slight transformation of the Mall of New Hampshire. We'll probably see something happen at the Steeplegate Mall up in Concord. So I remember long ago when the big boxes started closing up, people would say, well, what's going to happen with this big box? And to Earl's point earlier about adaptation, somebody came along who could make use. Maybe they didn't need one big box and they could cut it up into 4 units. We've seen that happen, and the void always gets filled.
You know, and I echo exactly what Dan just said about, I think it's very specific to the type of retail development you have. David and I recently have seen an awful lot of the multi-use type larger retail things. For instance, like the Tuscan Village in Salem, New Hampshire, where, you know, there's a development of a multifaceted thing going on there, from retail to dining to entertainment. There's apartment complexes, there's office buildings, there's a Mass General Hospital is going in there. At Exit 4 in off 93 in New Hampshire, you know, what is most often referred to as the Demoulas Shopping Center there, which is really part of the conversion of the old Woodmont Orchards, which is a 400-acre development. And you know, it's a live, work, stay, play type thing going on. Those seem to be an idea with a lot of vibrancy right now, and a lot of acceptance on the part of folks. Where they're located is tremendously important. You know, the two that I mentioned are, you know, obviously the Tuscan Villages in Salem, right over the Salem-Methuen line, right off Route 93. A very unique and an advantageous location. Exit 4 off 93 for the development of the Woodmont project. These are ambitious, very large projects, but they seem to be fairly successful as they're rolling out in different stages. I too have seen, like Dan mentioned, a kind of resurgence of strip centers, which were taking a beating 5, 6, 7 years ago. I mean, they looked like ghost towns, some that had been developed in the late 70s, mid 70s, early 80s. which had clearly moved through a phase of, robust financial activity to almost 50% vacancy. Some of those have changed hands now, and exactly the kind of thing that Dan has said are in there. Places where you can't pick up, your mouse and click on Amazon and get something in the mail tomorrow. Personal service type places, fitness. I've noticed that things like Planet Fitness now are showing up in a lot of these small malls because I think the dollars per square foot is right. They're good, located well in different communities. There's easy access. There's plenty of parking, and they have rejuvenated some of these malls. There's one close to where I live that was probably close to 60% vacant 4 years ago. It was bought by a new owner, totally rehabbed, facelift. Now it is 100% occupied, and you almost can't find a parking space in this area. So I think you have to avoid generalizations that say, oh, retail's dead. Yes, I think places like Mall in New Hampshire, Pheasant Lane Mall, Steeplegate Mall, Rockingham Mall, these places are going to have to adopt kind of a new or changing model to stay relevant. But it doesn't mean that other things aren't working. So it's just what it is and where it is. Very specific to the type.
Yes. Interesting. And David, your thoughts on that?
So it was interesting. I think we experienced some of the dislocation many years ago with the likes of big box stores, and these, Main Street retailers obviously had to change their game. And what they figured out was, these big boxes don't do everything. And to Dan's point, the resurgence is built upon offering either experiences or otherwise, sort of custom products that you can't get elsewhere. The wrinkle today is fulfillment, and everybody wants to buy online. So some of these retailers have adapted to curbside pickup, to in-store pickup, to exchanges and such. And so it's truly a case of, they got to figure out what they need to do to make sure that they address the needs of their consumers, right? So it's interesting, and I do think that trend will continue. I think while Earle is absolutely right in terms of those large destination experience type formats. I think what you'll see is a lot of activity that play around those communities and those projects, so that you're going to have infill with different retail uses, and I think that will also change what we see today in terms of retail environment.
Okay, and David, sticking with you for a minute, I wanted to switch over to office and talk a little bit about that. And I know Service Credit Union has an office story of its own. I mean, the basic premise here, is everybody knows, is during the pandemic, everybody shut down and office workers work from home. And the question now is, as the country very rapidly reopens, what does office work look like? Many people who have worked at home for a couple of years are maybe resistant to going back full time. How is hybrid office work gonna change that part of commercial real estate? And I started with you, David, just because you guys moved a lot of people quickly, right?
Yeah, back in March of 2020, in 3 days, we moved about approximately 700 people remote successfully, and the rest of the story is, for the remainder of the year, we had record services, record growth, and so I guess that's one measurement that it seemingly worked. The rest of the story, though, is we're still trying to figure it out. We embrace the hybrid model, and at this point in time, our staff comes in 2 days a week. But we also realized we didn't have everything we needed for them to be successful in a hybrid environment. And so what does that mean? We're sort of having the dialogue internally about what our offices should be, right? How they should support staff, in a hybrid environment. And that might mean we have more touchdown space, right? So, somebody has a need to be in the office, maybe technology is better there, and they want to drop in and get something done. So having that space available to them, or otherwise, having an in-person meeting, right? So we're currently going through that dialogue and saying, what do our spaces need to be? And I think that question is being repeated, hasn't yet been answered, but I think that's going to play out, in the markets. In Manchester, on Elm Street, we see adaptive reuse of large buildings, bringing residential space to formerly office space. And I think that's a perfect case, right? So I think that over the next several years, we're going to see changes in, use that is office space that is underutilized for one reason or another. And what is it going to be? Well, I think that ultimately depends on, each company. So.
Yeah, it's a really interesting process. I'll speak from a little bit of personal experience and say, as we're contemplating the size office that we need to be in, New Hampshire Business Review and New Hampshire Magazine and our other publications, we almost, it's as simple as taking making 3 lists and saying, from a staff perspective, always in, sometimes in, rarely in. Beginning to think about office space from that perspective and parking from that perspective and all of those challenges. And I imagine that companies much larger than us must be doing incredibly complex calculations to figure that out. Are you seeing any differences, Dan, in terms of the demand? What are people asking for in terms of configurations they're coming in to?
Well, Dave didn't exactly use the phrase, but I will. I use too soon to tell. Prior to the pandemic, I had the bulk of my work was business tenant representation, office tenant, professional services, and I got a lease signed the day before work from home was instituted, and I don't think I've done an office deal since then. It's too soon to tell for a lot of reasons, but I think one of the main ones is that a lot of leases are still midstream, and they haven't come up on termination or renewal yet. So people have, business didn't stop with everybody working from home. Everybody was able to continue working, generating income, paying their rent, but they weren't occupying the space. Once they're faced with renewal or termination, they're going to have to make the decision. And those issues that both of you spoke about will come to the fore. What are people going to do? I am out now with a few office users, relatively small. There really are no 20,000 plus square foot office users in the market. There haven't been for a while, and there's a lot of space out there that's available. So some will be converted. I don't know how far that will go. I don't know how many apartments we really need. That's another separate issue about whether we really have that demand long term. Do the demographics support that? But that's not the topic of this webinar today. My own thought is that the desire for human interaction will win. The concept of collaborating around the water cooler will win. I don't know if I mentioned it the other day, but I remember a commercial from many, many years ago. There was an office and a bunch of people who were around the water cooler, and they're all laughing. I don't know what they're talking about, but some guy comes in from someplace else in the office, and he's asking, did I miss something here? Almost like, have I been excluded from what's going on here? And I think we may reach a point where the people who are working from home and are not around the water cooler, not collaborating in the office, are going to miss out on something. I can't quantify that. It's not really tangible, but I do think that it's real. So, and I do think that a lot of companies are thinking about that. So maybe being together 3 days a week and working remote 2 other days may be the solution to that. And lurking in the background is what's coming next as far as the pandemic. I'd like to think we're done, but I'm hearing about other parts of the world where it's really shooting up again. And what is it going to be like for us? I just wanted to finish by saying that, in the pandemic of 1918, they came out of it with the roaring 20s. And that's kind of what we remember from that pandemic. From this pandemic, I think that history will point out that life and business did not stop because of the existing availability of technology so that we could continue to do our work. They didn't have that back then. What a technological blessing that we've had that ourselves.
That is a good point. On the technology side, what's happening? Are there any trends that you're observing that relate to firms replacing legacy technology systems in commercial real estate? And retrofitting properties to sort of meet modern technology requirements.
The space planners are really busy trying to listen to the users and understand what their needs are, what their concerns are. I don't think that there's really any new technology, but there are new approaches to design and furniture and things like that.
What are some of those? Do you know in terms of what are people looking for? Are they looking for more open or more closed in, or?
Yeah, it's creating the divisions that we once had. We're not going back generally to walled off offices like I have, but we're also not going back to 20 people working side by side on a bench. That was sort of a trend pre-pandemic. I would argue that actually started to change because people weren't really all that crazy about being next to one another on the bench. Everybody has to make a personal call at some point, if not every day, at least a couple times a week. And you just can't do it that way. You want your own privacy. So I think that those needs are being met in conjunction with the health needs. And we are seeing people spread out more, but they're also creating the touchdown spaces that Dave alluded to earlier and areas where people can get together, but in a safer way.
Yeah.
I agree with Dan. I think the sort of demand for, bench space, I'll call it, changed. Although I still think there's some people developing that. But I think the other thing that I saw as one of those trends was, people could have food service on site. People could have actually entertainment options on site, whether they be a, foosball table or such. And, particularly for, certain age groups, those are things that they're demanding. They're spending so much time in some cases in certain places. And, again, that work-life balance is a key priority. So some of those options are still being designed into projects that we see.
Interesting. I have a couple of questions here from the audience, and audience, thank you for being there, by the way, and feel free to put your questions in now as we come to about 20 minutes left here. One question from Kate Marquis. Have your guests seen any discussion or trends on businesses exploring or creating their own workforce housing or housing partnerships? I think that's probably one that's a top priority for a lot of people right now.
Yeah, I have a group that invested in an industry in New Hampshire, and as part of that investment, they engaged with the community to ensure that there was adequate workforce housing. And that, in this case, means that they will make investments. They may not operate the workforce housing, but it was a key consideration, again, because they needed to make sure that there was, an adequate supply of labor, number one, and they were housed properly and taken care of. And so that was part of this overall project.
It's interesting. It jumped out to me when you mentioned the company moving from Manchester up to Warner, for example, in a time where gas prices are now over $4 a gallon. It maybe makes sense to have also provide some housing for companies that are looking to move farther out because of the supply issues.
I'm not aware of any companies that I've worked with that have faced the issue directly or discussed the issue directly, but it comes into play with the labor force. You know, they're thinking about where's the labor force going to come from. So obviously, where are they going to live? But I haven't seen that specific issue.
I've seen a couple of companies address this on a very small scale effort. I had a conversation with a company out on the seacoast in the greater Portsmouth area that used, they were a hospitality business, and they had a lot of service type staff, you know, food service people, waiters, waitresses, house chambermaids, that kind of thing. And as you know, housing around the seacoast area is extremely expensive for everybody. And this company actually had gone so far as to buy a couple of older buildings in the area and remodel them into apartments. And I think they could house maybe up to 15 or 20 people in these things, specifically so that they could walk across the street and go to work. You know, that's a kind of intuitive approach. I mean, if I need to supply housing, I supply housing. However, it's often very difficult to do. And so not a lot of people, not a lot of entrepreneurs can really make that happen. I'm also familiar with a company up in the Lakes region that is a very large landscaping company. And you know, they have a lot of landscapers and people who cut grass and do those kinds of things. And they've actually rented several area houses and dorm their workers there. And I've heard about it happening like on the Cape for summer help kind of thing. I think there are a lot of ways people try to solve that problem. Providing workforce housing it kind of makes a lot of sense, but it's not easy to do economically. And so it remains a big struggle, but some people have tried it and to some degree are achieving some success with it, but it's still a big issue.
What makes it so challenging economically?
Well, and certainly if you're going to own the housing, you know, I mean, take for instance the Portsmouth thing I mentioned before. So you know, they want this to be either within a short walk or a bicycle ride to downtown where all the restaurants and the businesses are. Property is pretty expensive there. And so even if you're buying an old dilapidated building that can house, you know, 15 or 20 people, and then you're engaging in an extensive remodel, you're looking at a several $1 million investment so that you can secure your workforce. It takes there's a limited number of companies who can do that. I mean, that, you know, that investment there, unlike putting it into the productive capacity of your business where you're remodeling your business place, you're basically owning and operating apartments and housing. So it's a different kind of business to be in. It's expensive to do it, you know, but some people feel they have no choice and do it. So
I guess, and you're presumably operating those apartments at what are essentially subsidized rates, right? Because you're not charging market. Right. There wouldn't be any point to doing it.
Right. I mean, you know, if an apartment rents for, I'll pick a number. I don't know that this is, if an apartment rents for $1,800 a month or $2,000 a month in Portsmouth, you can't expect your bartender to maybe pay that in the wait stay. So, you know, they can afford to pay $700 or $800 a month. So now you're carrying the extra $1,000 a month essentially for the maintenance and the upkeep of the building, and it's a significant undertaking. You know, to some extent, businesses have done this for a long time. I live in an area where there's a lot of apple orchards, and a lot of those apple orchards employ migrant workers in the summer, people who travel all around the country. Well, they've always had houses on the orchard where the laborers could stay. I mean, this is more of a 21st century extension of that concept, but there's a limited number of times and opportunities where that really works well. something people try. You got to be pretty creative in this environment.
And no doubt. So we have another question from the audience. Jeffrey Young, and this is sort of a broader question, I think, for everyone, so we can maybe start and just kind of go around. Is the group bullish for the rest of the year despite rate hikes? And maybe start with David. Are you bullish?
I think based on what we see today, that the year should play out, knock on wood here, right? Should play out as expected. I don't think that we'll start to feel some of what we're seeing today, meaning the interest rate rises, sort of the tamping down of, maybe the tamping down of energy prices play out till next year. One of the things that is remarkable right now is that consumer spending remains strong, right, at many levels. We haven't heard a lot of stress in households, which means there's still demand out there. I think that was one of Dan's points on the real estate side, but I also think that's a point in the general economy too. Spending is still happening. And so I think to the degree that continues, that this year should play out accordingly. Next year, I think we'll see some pacing of that. I think households' budgets will be impacted. And as a result, I think spending will decrease.
Dan, how about you?
Yes.
Man, a few words.
Earle?
I remain more optimistic than pessimistic. Yes, I think that I think that we will find a way to navigate through this. I think there'll be some adjustments, but I don't expect the world to stop turning here.
So, and generally cooling, not this year, but next year maybe.
Yeah. Now, Ernesto, I think that there are other markets across the country that are going to experience stress. I just don't feel that New Hampshire is one of those. I think, again, people are looking at New Hampshire, they're perceiving lifestyle, they're perceiving value. And I think that New Hampshire economically is strong. So I think for those reasons, that's why this year should play out accordingly.
Okay, well, that's good news. Another area where I think firms are pointing at potential trends is sustainability. How much is sustainability, addressing climate risk, that sort of thing, factoring into people's choices around commercial spaces?
I'm happy to address that. I've got one client in particular that currently has a full solar array on his roof, and he's moving. We found space for him, double the space that he has right now, and he's going to have a full solar array on his roof. In fact, it was critical to him to find a building that could support the solar array. Not every building has the weight-bearing capacity on the roof that this guy needs. If he could do it on the roof, hopefully the site would have more land and he could put it on the ground, but the real preference was to put it on the roof. So we can check that one off. But clearly, businesses are investing in solar. I don't see quite as much geothermal, but seen a little bit of that. But solar, I think, has really taken off. It started more on the residential side, I think, but the commercial side has really embraced it. And I think there are several providers in the state. And we're seeing solar farms in places where they probably belong, utilizing land that could not otherwise be utilized by putting up a solar farm. I never realized we had so much sun in New Hampshire that we could do this. It's gotten to the point where when I call somebody from some other part of the country, this is Dan from sunny New Hampshire calling, they laugh, but we apparently have enough to do solar.
Are there?
Yes. We're also seeing, to Dan's point about solar farms, more and more commercial projects, including that aspect, whether it be on their rooftop or otherwise in a more remote location. they're using that as a hedge against energy prices and operating costs. And certainly that makes sense, but there's also an investment aspect to it as well, and financing available.
And what about like sustainable building practices? You know, beyond things like solar, when you actually look at materials and you know, the kind of windows that you choose and all of those sorts of things, are those things that people are emphasizing?
Yeah, the thermal envelope certainly has been a topic that we've seen, you know, for a number of years now. And, you know, I think particularly in New England, where we do get winter, the design standards have sort of incorporated, whether it be spray foam or, again, efficient windows and sort of layering systems and such, and HVAC. But so I think that's typically designed in this general area.
That's been my, excuse me, that's been my experience over the last 10 or 15 years, is that new construction is generally pretty much LEED level construction, but because it costs so much to get the actual designation, people just don't go the extra step. And in some cases, I've had discussions with clients about buying an existing building or putting up a new building. Obviously, that differential has really extended with the cost of new construction. But something I asked them to factor in is, if you put up the new building, you may gain some efficiencies in several ways that you would not have with the older building. And over the long term, it may be worth it to put up a new building.
As interestingly, I worked on a proposal for a project last year where the entity seeking that proposal actually had as an element of the proposal that you had to put together. You had to talk about your company's sustainability in terms of your office space or your factory floor or whatever, you know, kind of company you were. But that was actually a piece of the consideration was, you know, whether you were taking care of the environment or mitigating climate change.
One of the aspects of our headquarters in Portsmouth, we did design it to gold LEED certification. We got certified. You know, obviously that was about 5-6 years ago, but you know, we recognized that level of design made sense for a number of reasons. The quality of the environment, as well as the you know, workspace was more comfortable, and then obviously utility. So certainly is something that I think companies understand. To Dan's point, though, you know, it is costly to get certified.
I have not seen in the last several years anyone designing a building project, you know, with it coming out of the ground with the new project that didn't have an emphasis on, you know, the most efficient energy utilization. Not everybody is putting solar panels on their roof, but everybody is taking advantage of the best available energy conservation, heating and cooling systems, lighting systems. And to Dan's point, a lot of times when you're in an older building, there's a limited amount you can do. But I even see people, whenever it's time for a remodel, upgrading the lighting fixtures to low energy use lighting fixtures, upgrading heating systems to the most efficient thing they can get. And, you know, I suppose a certain amount of that is to be kind to the environment, but a lot of times it's going to result in better cost savings overall. And so you might pay a little bit more for that light fixture, but over the next 20 years, you're going to save an awful lot of money when you operate it. And I think owners and operators of buildings, whether or not they be for your business, you know, your manufacturing company, or it's your apartment building that you're renting out to others, operating costs is a key factor in all of this. And I never see anybody putting the cheap windows in. You know, it's always high-end, good building materials and aimed at efficient operation of the building.
Well, I think we have about time for one more. And I had a question here that had come in asking if you'd seen any trends in office buildings going to a hybrid model. And I'm wondering if the questioner meant not a hybrid working model, but a hybrid building model. And Earle, it reminded me that you had mentioned you were seeing developers were converting office spaces to residences. And so what kind of conversions are happening? Are in some cases people converting office spaces to office spaces / residences? Are you seeing those mixed? And what are some other things that are being converted from one thing to another to meet shifting demand?
Well, we've had several of our borrowers and investors recently converting their own existing buildings to various mixes of usage, as well as people buying buildings that were previously office buildings and going before the town, cities and towns, and getting them converted over to residential. I'm sure Dan sees that in a lot of adaptive reuse of properties around, and it can be anything from. Most of the ones I see wind up being mixed retail and residential. And they tend to be more of the downtown properties, high population center type properties. And to David's point before, where people have just kind of rethought their office use. And so these become kind of a very clear alternative use for some of these things. But
the conventional large urban center mixed use building would have retail on the first floor, office above it, and then apartments or condos above that. We really don't have anything like that in New Hampshire. 1000 Elm is now going to be converted over partially to apartments, but it's on various floors. It's not large blocks. I don't know this for a fact. My best guess is that ultimately it will be completely converted over to apartments. There's some retail space on the first floor, but that's the main, I think, mixed use we've seen. What Earle said, you have some retail. 875 Elm, the Citizens Bank building, is probably a good example. You got retail on the first floor and then apartments above it. I'm not sure that we'll see the retail, office, residential model from large urban centers. I don't think we have the demographics to support it, and I don't think we have the office demand to support it either.
I think what you see is a lot of the buildings that would be empty now. For instance, there was an article in the Union Leader, I think either earlier this week or last week, about a local investor developer who purchased an old credit union building, not ours, by the way, an old credit union building on, I think it's Union Street or Union and Elm, somewhere up in there, which was entirely an office credit union, and he's converting it principally to residential apartments. And a lot of these buildings, unlike the Elm Street one where you mentioned the tower, the Brady Sullivan Tower building, that's getting kind of a mixed use. This is a complete conversion of almost this entire building to this. And it's great because that building would be empty. There is no effective office use for that building anymore. And evidently the investors feel that there is still a need for more rental housing in the greater Manchester area. So that's what I meant about earlier when I said, we're always adapting and changing and finding a new use for something. Entrepreneurs are very creative and will find a way to make a silk purse out of a sow's ear whenever they can. And so, I think given enough time, none of this is going to go fallow. It will all be reused in some capacity to meet some perceived demand. So.
Well, that's a perfect note of optimism upon which to end this conversation. Just as you predicted, it went by very quickly. And so thank you all, David, Earle, Dan, and thank you to our audience. Tremendous of you to be here with us today. I learned a lot, so I'm hoping you did as well. And thank you to Service Credit Union for sponsoring today's webinar. Without you, we wouldn't be able to do projects like this and bring this kind of information out to the community. So thank you very much. Thank you to our producer, Emily Samadas. I'm Ernesto Burden, publisher of New Hampshire Business Review. Happy St. Patrick's Day. Have a great weekend, everybody.
Thank you. Bye-bye.